Q2 basis?
I think it's coming at around 7,078, the NII number.
Okay, so the NII is coming at 7,070.
We were working, it's around 7,068 approximately, so we should
so
get
then
that.
That's also an over 20% growth rate, which is coming on the NII and the profit figure. So HDFC Bank has managed to sustain that profit and NII figure that we've seen for so many quarters in terms of the 20% growth rate. We have Vaibhav Agrawal of Angel Broking joining in to talk about the numbers. Vaibhav, 70-70 is what it looks like on the NII, and the profit figure is also just at around 3357 crores. So that equals to over 20% growth rate for NII and 20% growth rate for the profit figure.
Right. So in fact, the net interest income looks, about 1 or 2% higher than what we were expecting. Bottom line is, again, a clockwork sort of a number. And what is encouraging is, and what really highlights the strength of their business model, that again, the gross and net NPA percentage is not materially higher than the last quarter, whereas, for other banks, obviously, there has been much, much more pain. So, clearly, overall, a very resilient set of numbers.
Okay, also some more numbers. It does 653.9 crores is what they've done in terms of provisions for this quarter, and also the non-interest income has come in at 2872.2 crores.
Okay, so 653 crores in terms of the provisions is higher than
654, you can say.
654 crores is what they've done, which is higher on a year-on-year basis, but it's lower than what they did last quarter. So I don't think that would have been a surprise. Net interest margins 4.3%. So that has in fact improved, if I'm not mistaken. It was around 4.2% as of last quarter.
Yeah.
So 4.3% for this quarter. Vaibhav, am I right? Have the net interest margins improved by 10 basis points if indeed it has come in at 4.3%?
Yeah, that's right. I mean, last quarter it was 4.2%. So I think even on that front, I think it's a pretty good margin.
Okay. Based on the gross NPA that they've reported on an absolute basis, it's coming at 4,255 crores, which equals to an 11% rise on a sequential basis. Now, it would really be niggling right now, but if you see it in the past couple of quarters, it's been a 5% rise or a 6% rise, or it's been flat. So would you be worried by an 11% Q-on-Q rise in the gross NPA, as say compared to a 4-5% rise in the last quarter?
Well, I think in the context of the overall expectations, for the sector, I think these are still, acceptable numbers on the gross NPA. It would be interesting to know, what was the bank's situation for the accounts which the RBI had really, given to banks, etc. So, and what is the outlook? So I think overall an 11% increase is something that should be quite comfortable.
And a 21% increase in the net NPA this time, Q-on-Q.
Right. That's on a very low base. So, absolute terms, the amount is not very large.
Okay. All right. We have Kunal Shah of Edelweiss Financial Services also joining in. Kunal, your take on the numbers that HDFC Bank has reported, especially in terms of the asset quality?
Yeah, so on the asset quality, when you look at it, there has been 6 basis points increase in GNPLs and almost like 4 basis points kind of increase in net NPL. So to that extent, I think it is pretty much in line with expectations in terms of overall provisioning as well. So we were also expecting somewhere around 650 odd crores of provisioning for this quarter, provided that they had almost like 1600 crores of floating provisions. So broadly, I think including the asset quality piece, the overall numbers have been pretty much in line with expectations, with PAT also growing at 20% and NII growth also coming at 23-24%. So I think broadly it has been very much in line with our expectations.
Okay, so you wouldn't be worried about an 11% rise on an absolute basis in the gross NPL this quarter and a 21% rise in the net NPLs?
No, so overall still when you look at it, it's sub 1% level. Okay, so not too much of a worry, and I think we know that RBI has given out the list of few corporate accounts, okay, wherein across the segment you will see some kind of inch up in GNPLs for almost all the banks. So I don't think it's too off bit, okay, in terms of say what they have reported. It is still like 6 odd basis points kind of an increase.
Okay, we have the news release with us as well. So I'll just try and read out a couple of highlights from there, where they have mentioned the net interest income has grown by 24% to 768.5 crores, and the net interest margin was at 4.3%. Other income has risen, which is around 28.9% of total net revenues, has grown 13.3% on a year-on-year basis to around 2,535 odd crores. We will watch out for the fee income, because that's quite a strong component of their business, where the fee and commissions were around 2,004.8 crores. So that's what it's come in at. Kunal, your take on the other income, which is up 13.3%. I think the street was penciling in something higher.
Yeah, so last time when you look at it, other income was, relatively higher on account of, resurgence in the third-party distribution fee. Okay, and retail fee also increased on account of credit card interchange and the processing fee. So to that extent, but any which ways, say last time in the corporate banking, there was say few disbursements which have happened towards the end of the quarter, wherein they would have booked a good fee. To that extent, I think overall in terms of a fee income, we were also not anticipating more than 12%. So I don't think maybe it was kind of a disappointment as such.
Oh, okay. So you were expecting around 12%. They've come in at around 13.3%. Advances have risen around 25.7% for the quarter. So that's largely in line with what the street was working with. Domestic retail loans, I think, has grown around 20.7% for the quarter, no, 30.4% for domestic retail loans and 20.7% for wholesale loans this quarter. So domestic retail has grown a whopping 30% for HDFC Bank. They have been managing to do that growth rate, but 30% is quite strong this quarter as well. But we have Hemendra Hazari joining in also with his take. Hemendra, your view on HDFC Bank's numbers this quarter?
HDFC Bank really disappoints the street. And going by that trend, I think they have been able to meet analyst expectations. But that is no surprise that even on profits as well as on asset quality, they have met analyst expectations. Now, this is truly commendable given the macroeconomic environment we are in, because I'm expecting even some banks to report losses in this quarter. So given such an environment, I think these results are exceedingly good.
Okay, well, one more detail on the asset quality, where the total restructured loans was 0.1% of gross advances as of December 31st, and this is as against 0.1% on a year-on-year basis. We don't have more details in terms of asset quality, etc. But Hemendra, based on what they have reported in terms of the numbers, what would you assume in terms of the asset quality details?
The asset quality, at least from the gross NPAs that they have reported, has been under 1%. So you would expect that, given that the way the bank's reputation, I really do not see any significant deterioration in its asset quality. So this has been one of those banks which has, got out of problem loans at an earlier stage and was willing to take the pain upfront, as they did with the SR Steel account. So I think one should not really see any significant issue on the asset quality.
Okay. We have Gaurang Shah, Geojit, BNP Paribas Financial Services with us as well. Gaurang, your take on the numbers, HDFC Bank?
I would rather put it this way. I think it's a consistent performer and in line with what more or less our estimates are, barring just minor blips on the net and the gross NPA front. As a disclosure, we do have a positive coverage, and we are maintaining earlier numbers. Depending on that, we had kept the target of somewhere close to about 1250, if I'm not mistaken. Post these numbers, we might just go back to our work tables and revise the targets in case if it warrants upwards. Okay. But I would say a steady run rate and a steady performer.
Okay. Well, I don't know if we have Kunal with us of Edelweiss. Okay, Kunal, what would your target price be on HDFC Bank, and would you be revising numbers based on what you've seen? Okay, I think we've lost Kunal, but we'll try and get him back. And we have Vaibhav Agrawal of Angel Broking still with us. Okay, Vaibhav, can you give us your sense in terms of whether you'd be revising your numbers post the numbers that you've seen from HDFC Bank and your current target price on the stock?
The numbers have been in line with expectations, so I think we would be retaining our target price as well and a buy recommendation. And I think this further, strengthens our confidence in the stock as one of the, preferred picks right now in the banking space.
Okay, fair enough. And Hemendra, your call on HDFC Bank, do you think that maybe it will inch up in terms of the valuations based on the consistency that it's managed to report this quarter as well, barring the fact that we don't know anything in terms of commentary, but ceteris paribus is trading at around 3 times FY17?
See, based on performance, it should inch up, but it all depends really on FI flows, because this is a heavily owned FI stock. And if FIs decide to exit emerging markets, because that apprehension is very much there, then unfortunately banks and companies like HDFC Bank, which are excessively owned by FIs, may actually be negative. So at this moment, you can see a divergence performance in the actual performance and the share price performance.
Okay. All right. Fair enough, Hemendra. We're going to leave it on that note. Thanks very much for joining in and talking to us, as well as Kunal and the others. Thanks very much for taking us through the HDFC Bank performance for Q3, which has been steady. Stock is up around 0.7%. Net interest margins improved 10 basis points.